Hi guys, this is Ray again, and in this video we will be covering the concept of big volume gap ups and how that's another characteristic within the visible accumulation section of the course that shows up on the charts. The first chart that I have up on the screen here is Snapchat. Snapchat back in April of 2020 gapped up on the highest volume in over a year with a earnings catalyst. This volume spike, and given the fact that it gapped up on volume with a earnings catalyst with a high closing range on the day that it gapped up, is visible accumulation and institutional interest with 160 million shares being traded on the day. So the big volume gap up characteristic is fairly visible on the charts. Some of the limitations that we have in place to weed out the quality ones versus the ones that are of lesser quality is the closing range on the day must be greater than 50% for that day, and the volume must be the highest in a minimum of a year. So Snapchat is one of the many examples in the 2020 market which was trending, which was a powerful trend in the markets itself, allowed the stock that gapped up on a earnings catalyst with volume being higher than any volume in the past year on a daily basis, allowed the stock to rally from the $17 mark to the $26 mark. Again, this characteristic is visible on the charts, but that doesn't mean it's an automatic buy. The context of the market must be kept in mind. If a market is in an uptrend, and Snapchat is one of the stocks showing constructive action after its gap up in price and high closing range, then one can potentially define risk on this particular chart and try and position in the name. The point of emphasis here again would be this is not a buy signal. If a stock gaps up with high closing range and highest volume in over a year in a confirmed uptrend, doesn't make it an automatic buy. You still have to define your risk, stock the chart for an entry, and then potentially position in it. This is a visible characteristic on the chart, and it has to be taken into context of a uptrending market. We're going to quickly flip over to a TradingView chart where I'll show you how our enhanced volume script clearly labels such action on your volume itself. So this is the same time frame, April 23. Snapchat gaps up on a earnings catalyst with a high closing range, and we label that volume with a HV, which signifies that the volume on Snapchat on this gap up is the highest in over a year, and the closing range on the bar is high. So the script on TradingView, which will be linked right below this video after you finish watching it, you can add it to your TradingView platforms. Another example is a liquid leadership stock in PayPal, which did the exact same thing. It gapped up on big volume, the highest volume in over a year, with a high closing range, and being a liquid leadership stock in a confirmed uptrending market, one can potentially position in the name after seeing such a characteristic and within the context of the markets themselves. So it just so happens, given the strong uptrend that we had in 2020 and this visible sign of accumulation on the charts with a earnings catalyst, allowed PayPal to move from its 140s to about the $200 mark. The next example that we're going to cover is CHGG. That was another example that gapped up on big volume with an earnings catalyst and a high closing range on that day. Again, the context of the markets must be kept in mind. This is not an automatic buy point. One must still define risk. So in the case of CHGG, it gaps up, consolidates above the $55 mark for several weeks after it gaps up on volume and then starts trending. So this is merely what it is a visible characteristic on the chart that you could potentially track the stock after the fact and see if you could get defined risks to potentially position in the name. The last example we're going to cover in this video is Twilio. TWLO did the exact same thing. It gapped up on volume, which met the criteria of the highest volume in over a year, with a earnings catalyst and a high closing range. And given that the strong uptrend we were in within the 2020 markets, Twilio ends up performing in a big way from the $170 mark to about the $280 mark in a uptrending market. Potential positioning on this name could have been through the high of the earnings day the very next day, which is a fairly advanced entry. Again, it has to be within the confines of your system. A gap up with a earnings catalyst and the highest volume in over a year doesn't make it an automatic buy point. It's just a characteristic, the spot on the charts, and then potentially position with defined risk parameters. We will wrap this video up over here, and I'll see you guys in the next video.